Good morning, Scott Redler, Chief Strategic Officer at T3Live.com. I feel like it's Monday. I want to do a quick update on Apple because I know a lot of people are very anxious after the action we've seen over the course of the past few weeks. Everyone does approach this stock a different way, and I know there are a lot of investors in Apple out there, and I know that over the course of the last decade or the last few years, you've been rewarded. And traders, I'll tell you right now, are not always rewarded because every time we've sold it, we're always typically upset because we don't hold it for another type of move. But then every now and then you get into a time frame like this when there's pressure on the stock and the stock technically trades with a heavy connotation. It's been more of a two-way trade / almost even a short. So I trade it from intermediate trends. So I just want to show you what the trend has been and what I'm thinking going into this week's big events. So first things first, you look at the chart here, you will see this was the last time they were, they reported earnings. They reported earnings, you had your big gap down. A lot of people thought it was going to go into the low 500s because of the report that it had, and you know what? There was demand there. It filled the gap. In 3 days was higher. This is when I put on my swing trade with my virtual trade floor. We all talked about it. And then the trend was to follow the 8-day moving average. Followed it for a really clean move before getting a little choppy here when it tested the 21-day. Okay, then you had the iPhone 5 speculation. You had a move to the big milestone of 700. And then what happened here? Short-term, outside day, very, very small, hard to see. And then you had the news over the weekend that they only sold 5 million. That's when everyone started talking about the supply constraints. So for me, that's when I said, okay, I'm done holding this stock, which I tried to do pretty much for the entire time of this move. Took a lot more, took more out of it than I've done in the past. And then the stop here was, 683. You've heard me talk about it, tweet about it. That's when the 8-day rolled over. That's when we closed below the 21-day, and that's when it became a two-way trade. All right, and there's been a lot of trades along the way, and each time it's hit major moving averages, you had a trade. Okay, this was the first time it hit the 50-day after trying to push below major support, so it's a little bit of a trap. Those on my virtual trade floor saw me have it for 3 days, but then what happened? It opened up above the prior day high of 671, traded below it, closed weak, that's your out. Then guys from the short side said, you know what? There's my 3-day bounce. It came right into the 821, failed there. I'm going to get short. Then this day you got pressured. Remember, this was the first time it closed below the 50-day, giving conviction to some shorts to hold it short. And then you had follow through to the downside to fill a void, because look at the void that you had here from the upside. Filled it real quickly to the downside. I remember on this day is when the fear started to set in, and we did get long. We talked about tweeting it, buying it below 625. What'd you have again? A 3-day move. Same 3-day move you had right here, but a little bit different because this downside move was that much more drastic. You had less time to think about it, but once it opened up, above the prior day high, traded below it, that was your out. And that was, guys made money long, and then some flipped and went short. Then here we go again, double bottom at the 100-day. So this one actually had a little bit more intensity to the upside. I got long this day. You could have added above this day's high, because we opened below it. Gave you some follow through, and then what happened on the 3rd day? The 3rd day again, opened up, traded through the prior day high, that was your out. So if you were just using tactical strategies, you had great entries on the long side and short side. Long, short, long, short, long, short. I took most of the long side entries. I didn't flip each and every time. And then what happened on Friday? Technology started getting weaker, IBM, you saw what happened there, broke the 100, 200-day. Google on Thursday got halted and let out a bad earnings release, so a lot of fear set in on Apple. And you had this wide range bar through the 100-day. You only hold it a few different times and tested it here, tested it there. You don't hear a lot of times about a triple bottom or a triple top because typically they go through them. And then here was another downside move. So the question is, what do you do with Apple now? Apple right now is like $93 off the highs. The last real correction we had earlier in the year was like 122 points. You have the iPad mini coming out, or the event on Tuesday. You have earnings on Thursday. At this point, people, they say they try and sell the event after the event, maybe, and then everyone's saying they're going to rally to the event. No one really knows what's going to go on here. All you know is your levels, and you know that it's been acting heavy. Today, it's up about $3 pre-market. So this is what I would say. You look at the chart again here. You go to this chart, you will see that from, what is it, 652 down to 609 in 3 days, it's going to try and bounce. So with that said, you have a floor that turns into resistance. Okay, first things first, typically if it's really, really weak, it won't give back or take back a third or more than a third of this last bar. And that takes you probably to about, 615, 616. if they want to squeeze the shorts a little bit, I do think that this area is attainable, between today and tomorrow. That's where the moving averages converge that have been holding the stock, and that comes in somewhere around, 623 to 628. So this would be resistance 1. If it can't get through here, it's going to take out Friday's low real quick, which is 609.62. Below that, you then have this little area at 600.25, and then here is your 50-day. Your 200-day. Wow, 580. So resistance 1, resistance 2. Okay, if it gets through here, I think that this area will be a spot that people try and reshort it, especially if it happens between now and Tuesday. And then come earnings on Thursday, we're going to need to see where we are. Okay, if we are down near the 200-day at earnings, I'm sure there will be a lot of people that try and put on some kind of call spread or some different option strategy, which we'll talk about closer. For now, all I want to say is this. There's going to be a lot of volatility with this stock. Technology has been leading us lower. It's been a two-way trade. If you are a long in Apple and you're an investor, you've been in this a long time and you've been staying with it, this has happened before. And people ask me every day now, has Apple seen its historic highs? If you go with the probabilities, I would say no. Right? The valuation's low. They have a lot of great products, and I do think that it's going to make new highs at some particular point. But again, that's a guess. Everyone's just guessing. Probability says yes. Over the course of the past decade, you've seen this many times, and it's been an opportunity. So we're going to have to see if that opportunity, persists. As of right now, it's been a better sell than a long since it broke the 21-day. It hasn't been able to sustain more than a 3-day bounce off of key moving averages before breaking below them. So we're going to watch to see if that trend changes. And I don't think anything drastic is going to happen between now and Thursday. It's just going to be a two-way trade. So I would recommend taking your trades, both long and both short. And then come Thursday, I will revisit the stock. We'll see where it is. We'll see if it had some type of bounce into the quarter, which probably wouldn't be good, because I think the lower it goes heading into the quarter, the better it could be, because the third quarter is probably not going to be good. They had a hard time. I still go into an Apple store. You can't walk in there and walk out with an iPhone 5. There's a process. You can't go into a Verizon store and do the same thing. So the supply constraints are there. I know the demand is there, but sooner or later, the supply constraints keep, hanging around. You're seeing some cute Galaxy commercials out there, and people might start getting a little upset. But let's hope that doesn't happen, and that's more of a, fundamental type of thing. So I do think third quarter is not going to be good. The question is going to be what's going to happen for the fourth quarter. Does the pent-up demand that's not getting the products that they want now, will they come into the fourth quarter, and can Apple deliver those products? So that's what people are going to wait for. And if we're low enough, chances are that happens. You get a nice gap up. So there might be a reason to be long some of it going into the report with some type of plan that if we get a gap down, it should be buyable because it'll be priced in. So third quarter, not so great. Fourth quarter better be delivered. They can't do what Apple does and say, okay, be all conservative for the fourth quarter, because the way Apple's feeling right now and the way it's been more of a sell and it's been heavy, the last thing it needs is to have a poor third quarter and then do its normal conservative guide down, because they're not going to get a pass the way they've gotten a pass when it comes in from a stronger stance. So at this point, no Friday's low, no resistance 1 and 2. Tread lightly, and there will be opportunities, and there's been a lot of opportunities in the past 2 weeks. You just had to remove the symbol of Apple and look at the price action. The price action has been, unfortunately, weaker than stronger. I will update this in the next few days. Have a great day trading. Scott Redler, T3 Live. Just take it slow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.